I'm here with the CEO Søren Krogh from Columbus. You have just released your 24 results, so let's take a look into that. The full year, 7% growth, a tad below your guidance, but still looks pretty strong compared to other IT consultants. But looking at the second half, it looks like there's a little bit of a slowdown. Is this broad-based, or is it some specific areas that you are seeing some challenges in?
Yeah, it's really a quite complicated picture with many moving parts. So, but if we should just go through sort of the major components, 7% organic growth, 8% all-up growth. As you say, we saw. Actually, I would say even the first quarter was very strong in most of our business units. Then we saw a little bit of a slowdown already in Q2. That was mainly our M3 business division slowing down, whilst most of the others were still going full steam. And that M3 division actually saw a little bit of a slowdown all the way through to Q4, and we started winning significant contracts in Q3 and Q4, but it takes a while for them to ramp up. So they've entered the new year at a pretty decent pace. Okay. And but they're also comparing now Q1 with the last good quarter last year. Dynamics, the biggest business division, it's become a very big. So it's a very big, particularly here in the Nordics. And we can see we had to make some investments in it in the second half years of last year, simply because it's so big that the business development engine to keep taking on board new customers, not to sustain its size, but to grow further needs a little bit more. So those were two components. Then I would, geographically, I think we should talk about Sweden. The Swedish market, the Swedish economy was markedly different from, for instance, Denmark, where we're sitting now. And we've just seen a lot more hesitance in the market generally, but particularly because we are strong in commerce tools, digital commerce tools. In the retail industry in Sweden, that's been a little bit of
some of the very cyclical part there.
That's been a tough one, and we've been working a lot. I think we've taken all the right measures. Now we need to see it come through to fruition. I don't think
a little bit isolated to Sweden. The other areas seen some kind of some hesitance, but actually you are still feeling very comfortable how they perform. So it is.
UK is a powerhouse at the moment. Also Denmark throughout 24 was very, very strong geographically. So geographically speaking, it was Sweden, because it's also big for us, but also Norway to a little bit lesser extent, and it's a little bit of smaller market that were difficult markets to operate in. So I'm kind of looking at Q4 as sort of a turning point where we need to start turning. Q1 will in this year will not be the fastest quarter. Need to build that momentum and then gather pace for the rest of the year.
Perfect. And then let's look at the margin side. Despite you being a little bit slower than maybe you had expected, then you actually delivered on your margin target, delivering inside your guidance range. Was that you being agile and always making sure you had the right capacity, or are you also seeing some of the initiatives you took when you released this new 26 height strategy to 26, which are really focused on the margin? So which one of is it that you actually can deliver on the margin despite the top line maybe slowing a little bit more than you had hoped for?
Yeah. Well, again, the EBITDA 15 strategy has many different components, and they're actually all working. So to start with, I would say that the base contract profitability that we have from working with customers has been much improved. So that contributes further down to the EBITDA margin. Our balancing of the company, how much do we deliver out of the Scandinavian markets and UK, US, how much comes from our delivery centers in Poland, in Czech, in Hyderabad and in Chile. Better balanced. We can get a little bit more on that. That can be further optimized, but it's working. Then we have the efficiency, which is actually the one that's been difficult in the 24 market conditions. We actually mastered that pretty well, I thought, in 23. I still think we're decent. We're good at it, but it was a hard market to perfect. So I'm thinking that's where potentially we can see a further upside in 24 by really taking that 2 percentage points higher or something in the efficiency ratio. So there's a little bit of an upside on that, but I think all components broadly are delivering. Yeah.
Then let's take a look at your next year's expectation. In the growth rate, in the mid-range of the guidance, you're looking at actually a little bit better growth next year. Margin side also coming up, but it can sound hard when the year has ended, maybe on a little bit on the weak side, and you're also talking about Q1. So what is it that makes you optimistic that maybe you can actually sustain growth or maybe accelerate it a little bit into the next year?
Yeah. Well, there are something that makes us optimistic, and then there are some things we have to balance out the view. But as I was just saying previously, I think some of the orders, the contracts we closed in Q4 gives good expectations for particularly M3, which we're kind of certain, or we are certain, is picking up in pace. We have our big dynamics unit. It's a little bit earlier stage, so they're in negotiation phases. So I would say somewhat higher uncertainty, but we're seeing a lot of sort of final stage business development activities that could lead to good results, mainly Q2 and forwards, I would say. Also our commerce division that we talked about, we need to see this materialize, but from what we can see, the Swedish market is starting to turn. I can see some of the macro numbers that we monitor obviously are starting to look better, but also our own sales pipeline. I talk to my own people when I'm up there. How does it feel? Who do we talk to? Some of the investments that we know that customers have been keeping in the drawer because they've been uncertain about that. We're seeing more of that.
We're seeing Sweden being a more cyclical industrial industry, and with what we are seeing in Europe, that might actually be a better economy. So do we have a little bit of that baked into a guidance, or is it you are seeing it in the contracts or your pipeline, and thereby you can also put it into your guidance?
We have some of that as well, some of expectation that the Swedish economy will start to be a better market for us to operate in. But obviously, there's also from a geopolitical macro perspective, there's so many things. So we stay very observant at the moment. There are some areas where we can start to see growth. Another aspect is that will require to drive growth is to increase our headcount again. We've been quite cautious in 24. We've been optimizing. If you're about to head into a storm, you try to prepare. I think there are some signs that we are now actually moving to better territories, but then on a daily basis you get very confusing signs. We're ready to, I'd say we're ready to start investing again, actually. It sounds a little bit bullish maybe now, but I think many of our customers are really experiencing, we're seeing good fiscal reports from them. And usually that means that they invest. So we'll monitor closely.
And on the margin side, you're also making improvements, 10 to 12%. Is that a sign that you're moving in the right direction? Also 15 in 26, it's a steep hill uphill, maybe because the markets haven't quite played out as much as you have hoped for. So would you say you are still on the, this year is still putting you on the target to hitting those 15 in the end of 26?
Yeah, definitely. So if the market would return to what we normally see as sort of the IT advisory market growth percentages of 10% plus, depending on where everything becomes much easier, but that shouldn't stop us from improving. So I think some of the sources of improvement that I mentioned before, there's plenty of headroom to keep optimizing, but there are some others which, if we take our overhead costs, we've optimized them quite a lot. I don't think I want to go into sort of a full cost-cutting game because we're building a company for the future, and the better way is diluting with more revenue, of course. So I much prefer to see the growth percentage
grow your way to it. Perfect.
But we can certainly go part of the way, just based on optimizing what we have. Yeah.
And then let's talk about the elephant in the room. You have set out that you are in a strategy process, which can lead to a lot of outcomes: consolidation, you being sold. Nothing is of course also. Can you tell us a little bit? Can you give us some thoughts, insights there, or is it still too early in the process to really give anything to market?
Well, it's an exciting process to be a part of. Obviously, I think it's clear when you look at how we've developed over the past year that we're coming sort of from a position of strength. A lot of our KPIs are steadily improving. But actually commenting on the process is almost impossible. We follow a very well-defined stage gate process, and we're moving forward according to the plan. Obviously, I'm impatient by nature and I would like to complete it as quickly as possible. But then you have to accept these things take time, and you have to do them right. And so we'll take the time that is needed, but not more time than is what's needed. I think that's what we can say.
I needed to ask the question. I, of course, knew the answer. But thank you, Søren, for taking us through your results.
Thank you.